All right, guys, welcome to today's before, during, and after. Today is Friday, June 21st. It's about 9:38 in the morning. And, guys, I've got a picture of wheat up this morning. And what I want to show you is I'm looking at a 15-minute chart here where we've been able to break down to some new lows. And wheat, for a very long time, has been on a very, very nice bull run. But it's starting to correct here. And what we've seen is we've seen a new low come in place. So when I look at the 15, we've got this new low in place, and we're running back into kind of this level on level, and our RSI is well below what it needs to be for us to be allowed to take a short. So I'm short 8 contracts right now of wheat right now, and it's a little bit of an aggressive position, but not too aggressive. I don't like to go too hard on 15-minute charts, but just an anticipation of this moving down. We're going to run into some buying pressure when we get down in this area around 693 if we make it down there. So one of our rules is going to be to move that stop to break even. These are our 2 targets right here, and I got to put the orders in. But once we get down to about 699, I'm going to go ahead and move that stop to break even. But what we're looking for here is trend levels and momentum, okay? Now, trend levels and momentum is all relative to the time frame that you're trading on. So on a 15-minute chart, we look at the hour for the trend, and you can see we've got lower highs and lower lows. Yes, we've been on this run, but we're starting to move down. And we've got our first low put in here below 40. So if it respects this area, I can anticipate another move down. So a couple things that I can do here to try and anticipate where we might be. Instead of just using our eyeballs, we can also come back here and use fib extensions to where we might go. And that 100% looks right about at this high. So that's not a bad area to actually put that. And then our 161 isn't anywhere close to our second. So I'm going to keep that in mind as we're moving down. It may make sense to move our first target to this 100% retracement. So I'm actually going to go ahead and do that. So the very first thing that I do when I'm looking at levels, I'm looking at the chart. But I want to use some math to help me try and identify where we might be a part of. And I first mentioned that we're going to run into some buying pressure when we come down in here. None of these levels are fresh, however. None of these levels get me too unexcited, if you will, as long as we maintain this southward pressure bouncing below 40 every time we come up. But what we'll do is we'll keep that at the 100%. We'll keep our second target where it's at, which is based on a higher time frame before this drop-based rally down here. So that makes probably a little bit more sense for us. And we'll let this thing play out. And I got to go ahead and put my targets in here. But when we come back for our during the trade, when I can also add an alert here to let me know that we are below. And I just type this in, halfway to T1, move, stop to break even. So I do that, and boom, we're ready to go. So we'll let this thing play out, and I'll come back once we're halfway, or whether we get stopped out on this level on the new downward fashion. All right, guys, so we're back for the halfway target. We nearly just hit it, and I'm going to consider that a hit. And it may hit while I'm doing this video, but what I'm going to do right now is I'm going to move these stops down to break even. That way we ensure that we're not going to lose money on the trade. So one of the rules that we have here is to not lose money, okay? That's our number one objective. Yes, we like profits. Yes, we like when our winners run. Yes, we like all of those things. But the thing that we like most is not losing money on trades and limiting our risk to a break-even trade if nothing else happens. So, yeah, as you can see right here, guys, we're up $4,500 on the trade, and that 15-minute area was respected. Gave us a little bit of trouble coming in, but we've been able to make a new low here, but we do have some divergence. So I'm going to move our stop to break even a little bit early. I know I had the stop or the alert set up at 700, and the low of this candle was 700.5. So just 2 ticks away from that. We're going to move our stop to break even. We've got a free trade. Yes, it would suck to give back $4,500. Yes, it would suck for all those things. However, what I've learned over the course of so many years of trading is you have to let these things play out. You cannot suffocate a trade, but you do need to restrict your losses. So if we get a bounce up, we'll get stopped out. That's totally fine. I'm totally cool with that. But I am going to let this thing run down, hopefully. And once we break below perhaps this area, we can implement some type of trailing stop. So there we are. We got a free trade, guys. I'll come back on the next video and let you know where we're at. All right, guys, so welcome back to our third part of this wheat trade. And you can see price came in, again, just a recap here. Price coming into our 15-minute area, started to fade away. We moved our stop to break even once we hit our halfway. And we started to move down. However, we're seeing a little bit of divergence now. Now, it is 2:17 in the afternoon. And what I can see here is that we have wheat. It closes at 1:20 Central Standard Time, which is in about 3 minutes. So I have a decision to make right now on whether I can take half or some portion of this $6,500 profit that we've got so far, or should I continue to just let this thing ride out? And one of the things I know about trading and one of the things I know about the market is that we should take profits when profits are due. All right, so I'm going to move this stop. I'm going to change it to a market order, and I'm going to get out 4 contracts. I know it's a little bit premature, but again, before the market closes, that's what I'm going to do, and we're going to lock in approximately $3,300 on this particular trade. We've still got the other $3,300 at break even. But if we do nothing else, then we locked in $3,300, and that's a win. So I'm going to let this thing play out, and then I can maybe trail down the last 4 down into our second target. But I think it's probably the most prudent thing to do here on a Friday afternoon is to take some profits where profits are due. All right, guys, so here we are taking up about half that position here. We've got 3,600 open. We got filled right at about where we're at right now. So roughly $3,600 on that first lot of 4 contracts, and we've locked in that profit as we move this down. Now, one of the things that we can do to move our stop to break even is we can use a moving average strategy, or we can use just above supply and demand. And I don't really see anything strong right now. I'm just going to let this play out over the weekend. I don't want to suffocate the trade, but when we come back here on Monday or Sunday night even, we can come into this and see where we're at here on wheat. So with that, I'll come back here once we reopen, and we'll go from there. All right, guys, so we're back on a Monday morning, and look at what happened overnight. Kind of remarkable here as we go into this drop, and we came in, we got short right here, guys. And it really started to take off our way. Now, we took T1 because it was coming up on a weekend. However, last night, 6 p.m., I got a notification that we gapped up. And look at what has happened today. We gapped up. We were at 702. And we are currently at 756 at 10:30 in the morning. Up 8.3% today. Wheat just continues to go and go and go. Look at this 4-hour chart. That's our 4-hour. We're going to come back up here and retest these highs. I have no idea whether or not these are going to work. I'm not going to anticipate another trade here on this, but we are real close and we have some divergence. So who knows what happens. However, on our trade, what we have is these levels breaking down. And when we came back up, look at where we were at. We're above 60. We breached that 8.89. It did not respect it, and we were not able to continue back to our second target. So what did we do? We took a position. We took a position short right here. We took our profits early because it was Friday. Because it was Friday, we had 8 contracts south. We locked in $3,600 on this particular trade. And we were wrong on the direction of where price was going. So I'm going to repeat myself. We locked in $3,600 and we were wrong on the direction of where price was going. And that's because the rules suggest that these are the proper actions to take. If you're still short when we come into a trend that doesn't have everything going its way, the odds are not fully on our side. So we need to take proper risk protocol, and that is to take risk, to take profits when profits are due. And so we took $3,600, we let it go over the weekend, and we gave back $2,900. So we made what? $3,800 on the trade, and we were wrong. So just the power of understanding where price momentum is at, time frames are at, where we're going. We had positive divergence on the end of the day here. Okay, that's not what you want to see rallying in. What if I didn't take off that half position here? Right? Probably wouldn't stopped out at break even, or maybe even taken a loss. Right? If we didn't move our stop in time. However, what we do need to do is we do need to watch price action. We're going to need to trade price action. And when we get the signals that we get, we need to take profits where profits are due. So hopefully you guys enjoyed this video where we made $3,600 even though we were wrong. All right, guys, take it easy. Hope you have a fantastic week and fantastic second part of your 2023. All right, guys, take it easy.